I would say don't let perfection get in the way of progress. When you have conviction, ship the product, don't react, act.
Why now hard tech? Why this integration and focus on things that are going into the physical world? Like what's led you and your organisation there?
I think the first and most important one that is a common denominator between great VCs and great founders is a relentless curiosity. I think I had a slightly greater interest in value creation over a longer time, a partnership with the leadership of innovation.
Hello, welcome to Techni Connect. Very excited to record this episode of Behind the Capital. It's our first live recording and we're in London, Notting Hill in this lovely studio. Joined by Eloff from Campbell Global. Thank you for joining us today, mate.
Great to be with you guys here in a slightly wet, rainy London. Big fan of what you guys are doing, connecting the technical community with companies in capital.
I know, Buzz, and yeah, I'm really excited to have you on board and hear your company's journey. You're doing some very exciting things. I suppose just because we're on a strict time schedule today, do we want to kick off with do you want to give a brief introduction to yourself and your current role and a bit about your investment focus?
Sure. Rob Eloff, I'm part of the investment team and a partner at Tamarack Global. We are an early stage venture fund that invests in techno-industrial innovation. We're based in the US, on both coasts of the US.
Of course, you're very exciting time with the world of technology as well. It feels like the world is exploding with tech and literally, especially the industry you guys focus in. So I'm really excited to discuss that in more detail. I was moving on to the next area before we go into that. How did you first move into venture capital? Especially the industries you guys focus in. How did you end up there as a career and how have you ended up in the specific areas that you look at?
Yeah, I'd say I had a slightly unconventional foray into venture capital, which I think of as, a apprentice or craft business with a lot of sort of learning by doing. But I grew up in South Africa and I got started career-wise in capital markets, working on a trading floor at Goldman Sachs out of school, which is, somewhat adjacent to venture.
Of course.
But it was a great experience, investing in multiple different asset classes and thinking about risk and opportunity.
Yeah.
I realized pretty early on that I had a bit of a penchant for non-consensus investing.
Okay.
And through that process, I spent a lot of time in various emerging markets, various asset classes.
Okay.
Ironically, I realized that in many ways, California is the biggest emerging market in the world.
Yeah, California for its capital.
Well, immense talent density, but transformers don't work, the grid is a mess. And so I began investing in the hard tech space around 6 years ago in sectors like advanced manufacturing, space, with that same mindset of critical infrastructure that I'd focused on before.
Yeah.
With the added benefit of being around this incredible talent density that much has been written about in Southern California.
Of course, yeah. I lived in LA for 2 years like yourself, and the talent levels there and the amount of companies that come out there that are leading the edge in the world, it is a unique part of the world, certainly, and it's where most of a lot of the VC capital and the growth businesses seem to be, although, probably you could get your eyes on, it seems like other parts of the world are catching them or creating a bit more competition. Yeah,
and I think it's kind of important to touch on the fact that there's a historical precedent here. Southern California hasn't always been known for deep tech or frontier technologies. When people think about Los Angeles, they often think about Hollywood or consumer aspects. And it's easy to forget, the history of legacy defense primes, of deep engineering skill sets, that come from academia in the region.
Yeah.
And so there's been an incredible explosion of a return to innovation in the physical world that we like to think of, Los Angeles and the South Bay Valley as Ground Central for.
I can't remember the name, but there's an area that's nicknamed something now, isn't it? Where literally you're getting this in LA, where you're getting this absolute explosion of tech and aerospace and space and drone companies, and it's like one of the leading hubs for startups.
Yeah, that's right. It's called El Segundo.
Yes.
Colloquially referred to as the Gundo.
There we go. Yes.
And it's having a cultural sort of zeitgeist moment of bench pressing Zins and Red Bull being back.
Of course.
But it's actually really, important because it's been driven by a lot of talent that's come out of companies like SpaceX.
Yes.
And so I think when I last checked, something like 1,500 companies have been founded by SpaceX alums with El Segundo being at the middle of it.
So Rob, moving on from our last question, like what early experiences shaped how you work with founders today when you're looking to potentially invest?
Sure. Specifically in venture, when I got started, early experiences that shaped the way that I like to work with founders today in the formative years was a lot about figuring out the path to success in sometimes very challenging regulatory environments with high friction, whether that was standing up a new liquid fuel supply chain in East Africa or dealing with challenging regulatory environments in Latin America. Yeah. Those experiences sort of showed me that this balance between creating long-term really positive outcomes and dealing with all the various friction points in the marathon rather than sprint, that is building value, requires, I think, three things. One, the ability to be a high impact extension of a founding team at certain points in a company's formation. Those aren't linearly distributed. That there are months and weeks where everything works great.
Yeah, of course. Never a straight line.
Yeah,
it was.
Yeah, exactly. And so when you sort of operate in that environment, it's really important to be able to, I think, listen attentively. Yeah. But then step in as a high impact player when there are unknown unknowns that need to be figured out and go back to first principles thinking.
Okay.
I think that it's art more than science, and this is a game of working with people.
Of course, and that's what makes it so interesting, isn't it? Because even if everything should align, it's humans, the things can go wrong, and how people react under pressure and how people react in certain scenarios, as much as you plan for it can't be controlled. Yeah,
but it's maybe worth just sort of taking a step back and thinking about what this partnership of working with founders is all about.
I think that'd be fantastic.
And so, the partnership that we like to build with founders is part of a bigger partnership where we're fortunate to be the guardians of capital from, folks that trust us with their capital to invest.
Did you have pressure as well?
Well, yes. But in this long-term positive sum outcome game that, we like to spend our time on, the investor and founder part of the relationship, as I mentioned before, really isn't a zero-sum game. There is not a, one wins and the other loses situation. And so to, build and compound value over time, I think a couple of things that are really important and how we like to work is a lot about connecting the dots.
Okay.
What I mean by that is there are very specific time points in the journey of a company where the future doesn't look as predicted. Or different opportunities present themselves. And I think some of the greatest founders I've worked with have an awareness that either we're pivoting or we're spending a lot more time on a much larger outcome than we expected.
And when you, obviously, just to touch on point, like you said, obviously you're always looking at longer routes, it's longer outcomes. Like obviously, what's the timeline for that? Obviously, I know it changes, but like when you're referring to these longer times, like what are you looking at as like investment focuses in some of the markets and companies you invest in? Is it like 3 years, 5 years, 10 years?
Yeah, look, most venture funds have a 10-year life cycle. Which is longer than some marriages last, and so this really is a partnership and a marriage in that sense. But most venture funds, look to deploy and invest their capital within a 3 to 4 year period.
Okay.
I would say specifically in the hard tech, frontier technology space, there's an interesting difference compared to venture that's captured everyone's attention over the last, let's call it 20 years,
yes,
right? Which is predominantly software, predominantly, maybe enterprise SaaS. In the hardware space, we've noticed much more of a step function change in the evolution of a company. It could be that you're building a vertically integrated business that is developing a specific hardware product that can be capital intensive. But there are these moments of dominance and step changes in the value of that company, the revenue that it generates.
Of course, yeah.
And so sort of keeping ourselves within that 10-year framework.
Difficult?
Look, I think the data suggests that extensions beyond 10 years are becoming the norm.
Okay, that's what I was thinking towards.
But I think it's completely achievable to create immense value together within that time period. And our first fund was launched in 2018, and that has been fully returned to its investors and
so
some.
7-8 year cycle.
Yeah, and I think the pace of change is actually taking us to a place where in the AI world you have companies approaching $1 trillion valuations that are less than 5 years old.
Things are moving extremely quickly out. I think of technology or future projections. I've noticed that a lot more on ideas on this new space within those returns. But if they're managing to make a return in a 10-year life cycle on that, then you've clearly kicked a golden one.
Yeah, but look, I think we like to operate on multiple 3-year innings within a company's
okay, so that's the way you look
trajectory.
At it. So 10 years, you're breaking that down over 3-year periods and the different stages planning that far ahead.
The average company's raising maybe 5 to 8 financing rounds from inception through success.
Okay.
It's not uniform how those happen.
Yeah, of course.
But I think people underestimate what can happen in 6 months
of
and a year.
course. I mean, that's one of the things that's so interesting, isn't it? Because obviously when you're raising capital work business, it's not each company, each business, each thing creates unique challenges. It's never like it's consistently the same. And I think that's why as a space, as well as the technology you're working with as a role, it must be highly interesting as a business, because I imagine not one day is ever the same.
That's right, Luke, that's a good point. And not every company is the same.
Yeah.
And so the capital intensity of, a company that's building post-launch, space logistics is very different to an attritable drone company.
Of course.
In its capital needs.
Still valuable assets or valuable technology that's critical to future infrastructure that's needed, so it falls within that bracket of what you'd entertain.
Yeah, that's right. And then I think, a really important component of this is where you're operating from the customer side. If you're predominantly operating with legacy defense primes,
yeah.
Or the government, Department of War or Department of Energy, those engagements can really vary.
Of course, yeah. And obviously their industries, they're going, while these new techs are coming through, those industries are innovating at a different way, and even the way you have to engage with those infrastructures now is changing, which is creating another opportunity, which we'll discuss more. Okay, moving on to the next question, I suppose, from your end. I know we've kind of touched on it, but is there any particular personal values or anything that guides how you look to partner with founders, or is there anything that particularly on that capacity that you're looking for?
Yeah, definitely. I think the first and most important one that is a common denominator between great VCs and great founders is a relentless curiosity to continue to go and pull the future forward.
Yeah.
And practically what that looks like is on a daily basis first principles thinking and not just accepting the status quo.
Nice.
And so that's a starting point. It's necessary but not sufficient condition.
Not everyone definitely has that relentless curiosity, so if that's a starting point, already slim pool.
Look, we're fortunate to be in the business of helping invent the future. So I think that's the first one, and people express that in different ways.
Of course, yeah.
The second, I think, is a tenacity that is superhuman. We're operating in a space that really is a 1% to 2% game, very long odds of success and successful outcomes.
So literally it's 1% to 2% success potential, with some of the things you're going into, it's actually the high 90% chance of failure potentially.
Those probabilities change a lot over time.
Okay, yeah.
From dominating a niche market to scaling into and dominating the mass market.
Okay.
But a lot's been written about the fact that 90% of companies pre-Series A don't end up working out.
Of course, and that mindset and knowing that risk and being comfortable or being confident within it, obviously, as well as the curiosity, are two critical traits, because you're almost trying to do what some people would class as the impossible.
We believe it's very possible.
Yeah, of course. Some people's mindsets, what I mean, sorry.
Yeah, no, 100%. And, some of the greatest founders of our time have, bent future into their favor. Elon's probably the best example of that.
Elon.
Exactly. And so that tenacity that I described, I think, requires creativity as well.
Okay, yeah.
I think what we look for a lot, which is a noble thing, is some evidence of having overcome adversity in one's life.
Okay.
It's very rare for a 55-year-old founder to wake up for the first time and do something successful through tenacity.
I imagine so, yes.
Doesn't have to do with building a company or success in a commercial sense.
Just somewhere they've come over a serious challenge, either on a personal capacity or somewhere where it's like an immense, and they've had the mindset to press and overcome and keep pushing through, because I imagine it's the time of pressure and trial that most people either crumble or fight or flight, as the word will say.
That's right, and it can be anything. But that ability to be creative with the world and express your tenacity through finding solution is a noble thing, we think.
Okay, perfect. So we've got curiosity, an enormous level of curiosity, the chance to believe the impossible is possible, there's some mindset there, and then it's that overcoming serious times of issues or tenacity where you've had to come and bite through and press through. Is there anything else at all?
Yeah, I think the last one, which is maybe an overused word, is that integrity of walking the talk. Founders in both the technical and sort of non-technical space have somewhat of an impossible task of creating a future which seems improbable and unlikely, and delivering on milestones to get there that are achievable. And that integrity of surfacing the path there, being very real about what it takes, and being very real about what's not working, is something that is incredible when it's done well, and the same should be expected of investors in this space. Of course,
you guys have got to see and go through that and go through those pain point journeys, and when things aren't going to plan, obviously still hold the faith that you believe in it, but also dealing with trials behind the vaccine that isn't normal. Really interesting thing about yourself is obviously you grew up in South Africa, you lived in London, you now live in LA. How have you found that journey from going from South Africa, there's a lack of legacy technology there, to now investing in like some of the most advanced markets in the world? I imagine that's quite a contrast for you.
Yeah, it absolutely is, and I think it was a contrast that I was very aware of growing up in South Africa, where on the one hand, South Africa has some incredibly impressive and advanced technological breakthroughs, be that the world's first heart transplant or the ability to produce pebble-based, nuclear fuel as far back as the 90s.
I never did that innovation.
Which ironically, is a huge talking point today with the nuclear renaissance. And so I think there was just this awareness that there was legacy infrastructure that might not serve, power brownouts, road infrastructure that didn't work, and this sort of obsession with the future, acknowledging some of those breakthroughs that happened in a distant part of the world that really punched far above its weight. And so that led to a real obsession of mine of sort of trying to see the future and be involved in that. And I saw that again and again in various emerging markets that I worked in, where there was incredible talent and there was this sort of need to leapfrog from those legacy infrastructure constraints and adopt the future.
And what's really interesting there, so it's actually something from your childhood that you saw that's almost been like driven into you, that now is, as an adult and your investment structure, you're seeing those same things as a kid, but in a different infrastructure of the world, and trying to lead to push that forward like you wanted to when you were younger, I assume, when you didn't have that opportunity?
I think that's right, and I think it's sort of this obsession with how can we get there faster, or what's coming next, and do we need to go from A to B to get to point C, or can we just skip point B completely?
And what, obviously, I know you're a child, but what do you think that is that drives that? Because it's doable, or like what's the thing that makes you look at it and be like, yeah, that's what I want to do? That's a very interesting point.
I think it's just an awareness that there isn't a path dependency, that you need to go from somewhat of a disadvantage technologically through the same adoption cycle, from fixed line telephony to mobile to internet, to the AI world that we live in today. If the talent base exists and there's risk capital available to get there,
as long as it's managed correctly and invested correctly and done great, it's actually doable, and we can do things quicker and keep innovating faster. It's just the mindset and the process ultimately, which sounds simple, but obviously is a lot more advanced than that.
That's right, and there's so many other precedents of sort of like the incredible industrialization of China over the last 20 years. That mindset seems to really be applicable in the US currently, where we have neglected the physical world from a venture perspective for, let's call it 30, 40 years. And to go a little bit further back in history, the original intention of venture capital was to go on treacherous journeys in search of some kind of treasure, be that gold, whaling, but capital was put at risk to surface those really unlikely massive outcomes.
Great. So following on from that point there, Rob, like one thing I do really want to cover with you is like, why now hard tech? Why this integration and focus on things that are going into the physical world? Like what's led you and your organization there?
Yeah, Luke, I think in many ways this is very much a return to the original intention of venture capital.
Okay.
And without going into sort of the deep history of venture, way back at the beginning, venture capital started out as a very high-risk endeavor to fund impossible missions, to find treasure, to be successful at whaling.
Okay.
And that obviously led to a lot of innovation in the defense world 40, 50 years ago, biotechnology. Yeah. But with the advent of, the internet revolution and the adoption of mobile phone technology, I think a lot of companies were in the position to trade CapEx for OpEx, and scaling in that physical world. And obviously over the last couple of decades in the West, our physical infrastructure has atrophied as we've exported that CapEx need for manufacturing, for defense.
Of course.
And there really was a dearth of innovation in the physical world.
Okay.
We're now at a point in time where two things have changed.
Okay.
One, with the rapid adoption of AI, there is the ability to simulate outcomes in the physical world.
Yeah.
The best example being SpaceX, where we don't need to blow up a rocket 1,000 times to know whether something works.
You actually just need it to go wrong a few times and test what went wrong, which is something Elon always loves to.
100%, and I'm all for explosions. But I think we're at a unique point in history where it's possible to have a good grasp of the collapsing cost curves of a company in the physical world based on post-prototyping production.
Is that because of the investment in the dramatic improvement in the simulation capacity that's gone?
I think that is true. Yeah. I think also by necessity through a hollowing out of the industrial base, and the need for more of an abundance of today finite resources, be those critical minerals, be those advanced defense technologies, it has become appreciated that innovation in the physical world needs to catch up, and that capital spent there potentially can create a future of energy abundance, safety and security, and exploring new frontiers. And so that shift in perspective has also, I think, enabled technical skill sets
100%.
To choose to go and innovate and build in these industries across critical minerals, energy, defense, space as a career choice. And I think this is very much something that we're in the early innings of, and there is a multi-decade potential to push the frontiers on the physical world.
Dramatically, yeah, and which you're seeing that. And quick question for me there, and obviously you might be able to answer, you might not. Why do you feel that 30, 40 year, 50 year gap was where capital wasn't being used, or why do you feel the Western world, we weren't pushing the infrastructure and the things through like we are now?
Yeah, look, that initial wave of digital innovation and connecting the world, with the adoption of the internet and then interaction on mobile devices created industries that were largely service economies. They also led to digital products and services proliferating.
Exploding.
Exactly. The fact of the matter is, the installed energy capacity of the US hasn't grown meaningfully over the last 15 years.
I almost felt like they did feel like they didn't need to.
And so the most obvious example of this is the immense power consumption needs of AI data centers that sort of highlight the larger energy supply issue in the US.
Of course.
I think that lack of attention and that focus of capital on seemingly attractive business models that were really about minimizing CapEx, creating really high margin businesses, and monetizing a consumer were, of course, incredibly successful.
And attractive. I imagined as an investor and people previously, like they were had great returns without as much capital risk.
Yeah, the reality today, and at Tamarack, we looked at some data on this exact point. This fear of the capital intensity of hard tech. The data suggests that, in fact, at around Series C
Okay.
for hard tech companies. The incremental dilution that founders face from the
Yeah.
capital that they need is a little bit less than 10% more than software companies.
Okay.
So
That's not as much
I
as you would
think the sort of the capital intensity of the industry is vastly overstated.
Okay.
You can also sort of think of the fact that if you're hiring an advanced software developer in the AI realm in the Bay Area
Yeah.
for high 7 or 8 figure amounts,
Yeah, of course.
that might be more capital intensive than building an advanced manufacturing technology that requires some 3D printers, some CNC machine tooling,
Of course,
and so
it's more legacy-based skills, but being used in the new, efficient ways on the capacity where the compensation requirements aren't as high. But quite interestingly, it'd be intriguing to see as those skill sets become more and more skills dense, more and more rare, will their compensation requirements be able to reach the heights of the good old top 2% of AI engineers?
Yeah, I'm certainly not here to predict the comp package of Bay Area software engineers, but I think what is resetting this narrative is the various examples of really successful vertically integrated hard tech companies that may have an initial period of intense capital requirements for prototyping and spending on capex, but the resulting significant step up in revenue that comes from being dominant in an industry
kind of counterbalances.
Counterbalances that. Anduril's a great example as a neoprime. We're seeing a lot in the advanced manufacturing space, and one of our portfolio companies, Divergent 3D. You have this real step function as a result of that vertical integration and owning your hardware that more than compensates
for the slight increase on capital.
Increase in capital and relatively low competition.
See, I love it. See, obviously I work within those spaces, and I actually thought the gap was a lot wider than you just explained, so always learning something new, which is really interesting to see. Okay, and then last question for me, a bit more light-hearted, is just suppose you have, like, who outside of work, like what you doing, what do you do for fun when you're not working?
Sure. Outside of work, firstly, I'm the co-founder of 3 Small Humans, and that is a great joy and a great bringer of patience and efficiency.
Of course, yeah, kids
and so outside of work, I'm a student of how
being a dad.
Of being a dad, and that's been leads to a lot of time outside, tinkering, building things with our hands. I am a little bit of an adrenaline junkie, and I love expressing that outside again. And so the ocean is my
surfer. You big surfer fan.
Guilty as charged.
You're fair. You are in the perfect place for it.
And so I've sort of had a lifelong affliction of going and chasing the next good wave.
Fair, okay.
And I think those 2 things aside, my obsession with the future leads to sort of a deep love of sci-fi, both reading and movies.
Fantastic.
And then lastly, having lived in a lot of parts of the world, languages are my thing. And so I've sort of gotten to a point where I've really enjoyed mastering 4 or 5 languages.
Okay.
Let's
go down that road. What can you speak?
Well, I learned English when I was 8. Afrikaans was my first language.
You speak that better than I do.
And then Spanish, French, and I lived in Moscow for a number of years, and so I got just enough Russian to be dangerous.
How would you describe your investment thesis and what you're looking for today?
Sure. So at Tamarack Global, we invest at the very early stage, pre-Series A, in the real economy. The real economy is immense in scale and size. We estimate it at about $40 trillion of addressable market. But that's actually not the most important thing. I think in our investment thesis, where we go to first is 10x technical and commercial talent that has the ability to dominate a market and surface extremely technical products. And so we spend a lot of time on the human beings behind these technologies. The second part of that is the size of the opportunity, of course. And something that we've learned and seen is focusing on an obvious existing really large end market today can be a little bit misleading. Some of the greatest founders in our portfolio have created markets, be that in humanoid robotics or weather augmentation that didn't exist as a formal market at the point in which those companies were founded.
So it was almost identifying the way they set up a business, knowing that market had potential, or creating a market.
Creating a market,
wow, okay.
exactly. And then the third component of that is looking at the ability to dominate that market that either exists or has been created. We tend to invest in founders that have had some degree of commercial success or be experts in their field. And that sort of is the composition of our investment thesis on the physical world.
Okay.
What we are not is a rigorous top-down thesis-driven investor that is particularly focused on one aspect of the physical world or real economy. But broadly, we've spent most of our time, attention, and capital on energy, national security, space, and then very importantly, advanced manufacturing and automated technologies that service that.
Nice, okay, fantastic. Then just going a little bit more further into that, what are the sectors and the technologies that excite you or interest you the most right now?
There are many, but maybe I'll focus on three that have really captured my attention as we're sitting here at the beginning of 2026. The most interesting and maybe most overlooked opportunity, we think, is the post-launch orbital space economy.
Okay.
Many of your listeners and you might know that, over the last 20-something years, SpaceX has taken the cost of getting payload into orbit down by roughly 90% from, let's call it $26,000 per pound to $2,000.
Okay, and that's a general ecosystem advantage as well.
It has. Now that we're there, now that we can be orbital efficiently, the entire ecosystem of payload transfer, refueling, perhaps manufacturing up there is wide open. And so we're spending a lot of time and attention on post-launch space.
Okay.
I think the other that really excites me and that the world is spending attention on is the transition from the first generation of AI around inference, text-based, agentic, LLM intelligence into the physical world.
Yeah,
and we
mentioned that, don't you? The physical world, that adaptation of technology coming in, it seems to be the huge thesis that everything is judged by at the moment.
Oh, this is a really hard problem. We had a front row seat to the early innings of this with our investment in Figure AI, which is developing a multi-purpose humanoid robot. But the challenge of bringing AI into the physical world, which involves creating world models, having reasoning around spatiotemporal alignment, is a really interesting problem. But we're seeing this really rapid adoption in industrial settings of putting physical intelligence to work. And then I think the last thing I'll leave you with is, if you think about the entire opportunity set for hard tech in the real world, which we think of as a $40 to $50 trillion opportunity.
Small number.
Small number, lots of work to do. Approximately half of that speaks to sectors that have seen relatively little innovation or technology adoption, and specifically that relates to agriculture. And construction, the built environment, and the materials that make that up. And so we're really focused on that too.
Cool. So moving forward, fantastic answer. From your viewpoint, what technologies or business models do you think are going to define the next decade?
Look, we're very much in a place where vertical integration is back. And we're seeing a lot of success with that in advanced manufacturing is a great example, where the technologies that I think are proliferating have the ability to design, manufacture, assemble hardware. So vertical integration comes with obviously the complexities of needing to spend a lot more capital on the problem, and also acquire a variety of skill sets, not just design and manufacturing engineers, but also systems architects. But I think it's becoming consensus that vertical integration is not only acceptable but also necessary to dominate in this space. Aside from that, on the specifically business model side of things, the ability to then include intelligence in the stack of the hardware product you're building is really interesting to me. And then just lastly, as founders build companies in the physical world, the business models that we see proliferating do tend to look more monopolistic. They oftentimes start out trying to service inefficient legacy primes in the defense space or OEMs as a customer and potentially replace them in time. I think what would be great to see as a business model is, in fact, to build completely new categories of companies. A great example from our portfolio is a company called Rainmaker, which is in the business of cloud seeding and solving the pervasive problem of not enough rain. And the impact of that in agriculture.
And areas where you can't have the weather to develop food and other details.
That's right, and it also touches significantly on national security. So here is a vertically integrated business that builds stratospheric drones, has built a very sophisticated radar technology that can have a high degree of accuracy on augmenting precipitation. But there isn't really a precedent for that. There isn't a knowable weather augmentation market. And so a lot of these business models relate to making assumptions around creating industries.
Okay, cool. And then obviously just for some of our younger listeners or students, just what do you mean when you're referring to vertical integration? You've mentioned it a couple of times, let's cover that a little bit of a high level overview.
Absolutely, great question. Between the late 90s and let's call it 2020, there was a big emphasis on building asset-light, horizontally expanding software-first businesses. It was left to others, customers or partners in business, to bring the means of production. You didn't have to own the entire hardware stack to build a software company. And so vertical integration refers to a situation where you own and operate almost every aspect of your supply chain. From manufacturing, through production, through assembly, all the way to the end customer.
So no tier one, full life cycle, everything you make it in-house, you build it in-house, you then take it to the customer, everything's built and not outsourced in any way, shape or form.
That's right, you're not just selling an API that integrates into a software product that other people use.
Or not acting as a tier one into going into an overall OEM of some industry, it's actually everything from start to finish owned in-house.
The greatest example of a vertically integrated company would be Tesla.
Of course.
That manufactured its own complete supply chain from battery through car manufacturing through to the software in a Tesla. Prior to Tesla, conventional wisdom was go and acquire battery technology from the best operator in that field.
Integrate. Everyone used to go to the tier ones and then integrate the systems, and the OEMs seemed to previously integrate or design some part of the system rather than your Tesla, I do agree, started that trend that's now going into other industries where if you can, it's not easy to do. Tesla make it look easy. I imagine it's a very difficult thing to have, but that's ultimately what we mean by vertical integration. It's end-to-end control.
That's right, and I think the thing that this vertically integrated future has shown us is that it is a really important part of the data flywheel of generating first order data around how your products performs with the customer, but also the data insights around how you manufacture, around back into the design process. So vertical integration today is a lot also about creating a data layer that's proprietary.
Okay, cool. Okay, fantastic. And then, so the next question, I suppose, where do you see the most overlooked opportunities for the next 5 to 10 years?
Well, I don't want to give all the secrets away. And I touched on some of the aspects of, the real economy that haven't, been addressed by technology writ large yet. I do think that manufacturing is wide and such a big part of the economy. And so, advanced manufacturing and automation in manufacturing has addressed some very, particular verticals. Everyone's remembered that a CNC machine is important again. But I think manufacturing and its sub-verticals is somewhat overlooked because it's something that in the West we haven't done for a long
Yeah,
time.
we've outsourced a lot of it, haven't we, for cheap, what we used to think was cheaper capability producing products, and actually now we're trying to bring that back, which is quite a critical thing for us to do, but that's a different conversation.
Yeah, and I think there's also a tendency to ignore some of the picks and shovels around new industries.
Yeah.
A good example there would be we just released a really comprehensive report on nuclear energy.
Yeah, okay.
And a lot of capital and attention has been absorbed by small modular nuclear reactors, the potential for fusion.
Okay.
What is overlooked in big new industries like that
Yeah.
is all of the subcomponents, instrumentation and controls, digital aspects of that they're path dependent on.
That they need ultimately to move that forward.
Yeah, and so I would encourage people to look at the picks and shovels around a new industry like nuclear, which touches plasma heating, and various other aspects of building that new industry.
And obviously a fantastic opportunity as well.
We think so.
Section 3, moving on to industry insights. Question number 1, I suppose, what major trends are shaping the future of these sectors that you invest in?
Sure. Look, I think I'd be remiss not to sort of acknowledge that we're in a very interesting geopolitical environment,
Of course.
where the West has reflected deeply on our means of production, national security, and the ability to, have secure supply chains.
Mm-hmm.
And so within the context of that geopolitical backdrop, what a major sort of contributing factor here is to these industries scaling is a revisiting by the capital stack around what this opportunity means.
Okay.
We speak a lot internally about what we think is a collision between venture capital, private equity, private credit.
Okay.
In the US, you're seeing a greater deal of partnership between early stage investors like ourselves that are taking early stage risk, developing technology, commercializing it.
Yeah.
The need to finance those assets, either with private credit or bank debt or earlier stage private equity.
Yeah.
And so that conveyor belt of capital interacting with
Early stage.
hard tech
Yeah.
is seeing a lot of interesting behavior change.
Okay.
It's a really important part of our work to
Okay.
connect those dots, and we're fortunate to have great partners beyond the stage that we invest in to interact with the asset class.
Okay.
But you're seeing relatively early stage companies, especially in the energy sector, with the ability to go and raise $400-500 million asset construction strategies from not venture capital.
Okay.
Venture capital is jet fuel.
Yeah, of course.
It's appropriate when you really want to inflect and
Okay.
take a high degree of technological risk,
Yeah.
but it is by no means the only capital factor
Of course.
in building hard tech businesses. And so it's really exciting to see that landscape shift.
Okay.
And we're grateful to be able to play a part in that.
Okay.
So the capital landscape is shifting. The other thing I think we should talk about is the regulatory environment.
Of course, especially for the geopolitical industries, definitely.
Sure. We've seen some incredible behavior change and just speed to execution within certain highly regulated industries, certainly in the US and I think here in Europe as well.
It's just beginning. I don't think it's been as quick as USA, but I do feel like it's slowly catching. This year's a critical year from my analysis, but I'm sure you'll have a different opinion.
No, I actually don't, and I think Europe as an opportunity is really exciting.
Yeah.
I think with a growing consensus that sovereign security and supply chain resilience is an important thing to do, both from government and institutions as big as JP Morgan, who released their Strategic Resilience Initiative, which is a $1.5 trillion program to finance the real economy. A consensus has been built that this is necessary.
Okay.
And I think we're seeing blitzscale pace and regulatory reform. A specific example would be the regulation around nuclear energy in the US from the NRC, but also differentiating between fission and fusion technologies.
Yeah.
And so that is, an aspect of the sector that is becoming a tailwind rather than a headwind.
Of course.
Sometimes the change of pace is glacial.
Yeah.
And then I think the last thing that's worth mentioning is just incredibly inspiring seeing the immense talent that is choosing to just build in this space.
Yeah.
We every week meet incredible talent that, rather than continuing to undertake research at NASA or an elite academic institution, is coming into the real world and taking the risk of building companies in the physical space.
It's that mindset, isn't it? Robin's doing the research all the time. It's physically doing it. And I also think one thing that you mentioned that was really interesting is the mindset from the world of the West is these things are necessary. They're not a desire anymore, like they're required. And that necessary requirement is what's changed the mindset. And I think is the key developing all the capital and the development from the governments, from the VCs. It's like, we have to do this or yeah, we will fall behind.
Career-wise, it's just not that risky. You can just do things. Going out and trying and perhaps failing is potentially a less risky aspect for a lot of the talent entering the workforce than climbing the corporate ladder.
So it's that fear of failure mindset's almost changed a little bit, you'd say, than the people previously used to be quite often fear of failure. Now it's like an acceptance and like an attitude, and everyone's...
Yeah, and of course it ties into the proliferation of artificial intelligence, right, and human labor being replaced in the service industry. It is true that we have a huge shortage of electricians, plumbers, soldering skill sets, and so that's another tailwind that's affecting the industry.
Love it. Okay, and then moving on to our next question, I suppose, is there any developments or industries that you focus on that you think people are misunderstanding or underestimating?
We've touched on some of them, but I think the opportunity that is the space economy is vastly underappreciated, and will be
one you would pick.
You know, if SpaceX goes public at $1.5 trillion, we can place a bet on that.
Of course,
regardless, if the company with a greater than 90% share, just in launch and getting to orbit, can achieve a north of $1 trillion valuation, that is only enabling what's to come once we're in space, and everything that comes from that economy. So that's being underappreciated.
If my understanding is correct, and correct me if I'm wrong, if SpaceX are able to hit a valuation like that, does that open a brand new whole ecosystem? Does that open a bigger opportunity for a lot of other exciting startups to come in to that space?
Yeah, I think our perspective here has really been shaped by one of the companies that we're fortunate to be an investor in, called Impulse Space, which was founded by truly the first engineer at SpaceX.
Oh wow, okay.
And if you think about the fact that for a payload to be transferred by two communication satellites in low Earth orbit that are traveling at something like 17,000 miles per hour. Now that we have access to low Earth orbit, geostationary orbit, transit used to take 6 months. With Impulse Space, that can now be achieved in a matter of hours.
Jesus. So that's a deduction in... Well, okay, fair.
We've all started reading about data centers in space. There are
I've heard this.
A number of physics reasons why that makes a lot of sense. But the way to get there has been decosted significantly with SpaceX.
And the speed and capacity of it as well. So if cost has come down on the speed that we can access it, it creates a fantastic market.
Yes, and so from a natural resource perspective, from a communications defense perspective, that domain is now accessible.
Wow, okay, fantastic. Okay, so one thing we haven't spoke about yet in your viewpoint is what are the biggest challenges founders face in the world today or in these industries you focus in?
Sure. First and foremost, they're operating in industries that tend to have dominant legacy primes or OEMs that have been in those positions for a very long time.
Large players that are hard to compete against.
Yeah, oftentimes with industries that have a very long tail of fragmented subcontractors. And that sales cycle is really challenging.
I have no doubt.
I think sometimes there's an underestimation of the potential for innovation and just sort of talent at those legacy defense primes.
Of course.
So there is a little bit of a David and Goliath dynamic at work here. What we found is that those can be great partners. and we can go sort of into a slightly more specific example of that down the line.
Definitely.
But just the awareness that you're poking a big dog with a sharp stick.
Yeah, definitely. They will bite hard.
Yeah, I think the regulatory environment is something we can't ignore.
Yeah.
And so engaging with regulators in energy and defense has become better.
Yeah, definitely.
But some of that is inside baseball.
Yeah.
To use an American sports analogy, if you'll forgive me. I think another really challenging thing is we often find that there is an abundance of talent of deeply technical builders.
Yes, definitely.
And there's a big distinction between founders that want to be scientifically correct in an academic context,
yeah,
and be commercially dominant.
Okay.
And that's also difficult for founders in these industries because hiring for that commercial muscle in an industry that you're looking to dominate
yeah,
can be challenging.
I imagine.
We often see companies hiring away commercial talent from legacy incumbents in the industries that they operate in.
Yeah.
We see this a lot in the materials space,
Yeah.
where the same person has been working for a multi-billion-dollar specialty chemicals manufacturer for their whole career,
Yeah.
and they can do a lot more for a new materials company.
Okay.
But that is a challenging hiring.
To pull them away from there, or because of a lack of talent, or why do you feel that's a
I
challenge?
think it's actually a little bit more about repurposing them into a business development sales role
Okay.
at a much younger company,
Yeah.
where you're iterating really quickly,
Yeah.
and you are spending some time defining what your ideal customer is.
Okay.
It's not the same as picking up the phone and just continuing to sell the same product,
Of
a
course.
specialty chemicals product, to 20 customers. It is understanding which product you're going to surface first,
Yeah.
and who the specific buyer for that is.
It's a different mindset of having that approach and doing something completely new, and you're almost having to innovate in different ways. And if you're used to working a certain way, the challenges that faces are not only pulling the talent, it's also attracting them to work in that new mindset, I see.
Yeah. And then the last one is, so much of this is about narrative meeting expectations.
Mm-hmm.
And I think what can be challenging, and when done well is really powerful, is the ability to not compromise on the long-term outcome.
Okay.
To use a specific example, we're investors in a company called Fuse Energy,
Yeah.
which is
Great
developing a nuclear fusion technology, which is something that is going to take time.
Yeah, definitely.
But along the way, they have realized that there is a massively underappreciated market for radiation hardening as a service.
Okay.
Which service is obviously the defense industry, both in space and terrestrially,
Yeah.
and also the medical industry with isotope production.
It's a huge opportunity as a market, enormous.
And the challenge that a founder in that space might face is continuing to develop a breakthrough nuclear fusion technology
I'll focus on those other industries as well.
while monetizing byproducts of what they're building along the way.
So you're getting distracted by the short-term wins, and the long-term goal keeps getting pushed back, or?
We don't necessarily see it as a distraction.
Okay.
We think of it as creating, to use a venture term,
Mm-hmm.
a much shallower J curve, meaning less capital intensity needed to build the ultimate propulsion technology,
Okay.
because there is a customer for a byproduct of what you're building along the
So you
way.
can then use that capital to reinvest rather than having to rely on future VC capital to get there.
That's right. And so if founders in this industry face the challenge or the decision-making parameters around whether they're only going to be in pursuit of the really long-term objective for an incredibly disruptive technology, or be commercial along the way to service other aspects of the industry.
It's almost while you're hitting the long-term goal, the benefits of these sub-industries that you find that can then generate further capital that allow you to get there with your own capital intensity rather than relying on outside funding as a bonus, but then it also will create challenges, won't it? Because even though it's a benefit, you have got to digress slightly away from where you're wanting to go long-term.
Yeah, it is
And the challenges that
commercial
faces.
mindedness without mission driven.
Yeah, and the long-term goal's hard. These side goals are really hard as well. And it's just trying to balance all those plates and do it correctly without failure, which is probably easier to fail than it is to succeed.
Yeah.
Fair, fantastic. Anything else?
I think all of those challenges might still be easier than trying to sell another enterprise SaaS offering to the internet.
Yes. So on to the next section. My personal favourite, I always like to go through this well. Guidance for first-time founders. So first question, what should a technical founder understand in your viewpoint before approaching VCs or any form of fundraising?
Sure. I guess it goes without saying that fundraising from VCs is approaching a jet fuel bank for a very specific kind of capital.
Okay.
And so I think it's worth remembering that most VCs are in the business of saying no.
Of course.
And most VCs know less than they like to let on and come with their own preconceived biases.
Okay.
So we got to be honest about that.
Yeah.
And so I think it's really important to focus on beyond the capital. I like to believe that capital is a commodity and great technical founders building the right businesses will get funded.
Of course.
I think it's really important to know that you're trying to match a narrative of a really exciting long-term outcome with some achievable milestones along the way.
Like some shorter term goals that are going to hit that's proving that you're going in the right direction.
That's right. And I think that's a difficult narrative to balance because the prize is immense, but there are certain levers that need to be pulled on along the way that you're demonstrating that you and the technical team that you recruit behind that vision are capable of achieving.
Of course.
So I think what could help, I think there's a sub-question in there of sort of what could help in that process. And so I'm always really excited by meeting a founder that is able to interview their capital as well.
Yeah, so
with a bit of
system.
Totally
Looking for you the same way you're interviewing them.
Yeah, I think sort of some of the interactions that don't go well, we always try and leave some time in conversation with the founder for them to ask questions that they might have of us.
Yeah.
And I think that's just a really great opportunity to surface the difference between a venture capital firm that knows just enough to be dangerous,
of course,
or has actually done the work to know the knowable things about the industry that you're building in.
Or the idea, of course.
And it's a great opportunity to sort of speed date on things that are going to be difficult and socialize some solutions to that.
Yeah, definitely.
So don't be afraid to interview your capital.
Which makes sense because almost like you don't want to come into that idea with like submissive where like it's them and they're meant to be an advisory and yes, you should listen to them, but also if you're just doing constantly what the VC is telling you to, I imagine that doesn't always get the same success. It's got to be a working partnership where you both have different skills but you're on a similar alignment. If they're not interviewing at the beginning well, I imagine some partnerships seem great at first and then problems that could have been identified early unravel.
They do, and you know, this is all about exercising great judgment, both as a founder as an investor. And so I think there are ways to separate noise from true signals in that initial conversation.
Okay.
I think the other thing that is obvious is venture funds talk to each other,
of course,
and play telephone due diligence.
Okay.
And so there is very little good that comes from creating artificial urgency or inflating the interest in something that you're building.
Because they just communicate and they just verify with each other ultimately.
Well, look, great founders have more demand than they have supply of financing needs. But my favorite question to a founder when we meet is to ask around what it is that they don't have in their existing capital base that they need. And so that self-awareness of what it's going to take, aside from just, you know, dollars and cents, of working together to get this right.
So it's almost like when you're looking for partners or with VCs, obviously capital's one, but almost look for more. So literally, or look, well, I'm actually short here, I've got VCs that cover this, I need actually support here, because your VCs as well as capital ideally should all bring with different skill sets, data and knowledge that enhances the company.
Yeah, and talk is cheap, and so I would spend some time doing some work on successful outcomes within the portfolio of whoever you're speaking to that have been successful, and be curious about what worked and what didn't work and how that might be applicable to the business that you're building.
And any synergies to what they're trying to do, or is there anything that's transferable? It proves that you guys have not been on the same journey, but something that's transferable.
Yeah, that self-awareness of sharing how you would face a challenge, but asking for an opinion and then deciding for yourself whether that is a signal or noise.
Fantastic answer, Rob. So moving on to our next question is, what helps a founder stand out in your viewpoint when in these competitive environments looking for VCs?
It's actually one of the hardest questions. Look, I think that we believe that it is possible to demonstrate a version of success or overcoming long odds or just dealing with adversity somewhere in what you've done in your life up to this point. And I think that's something you can be really creative about. These days, when people look at a resume or a CV, they tend to go straight to the bottom and find some interest in how people spend their time that they have control over. And so I think for a technical founder to stand out in this industry, it's great to lead with something that was a massive challenge that they aced. And it can be completely unrelated to what they're building at the time. Peter Thiel famously selects Thiel Fellows on this basis and the choice to opt out of college and go and do a hard thing, and I'm not suggesting that's the way to go.
It's a of adversity, isn't it, and fantastic thing that led to fantastic success. So.
Yeah, and oftentimes it's the inception of the idea. What did you struggle with that gave you this insight that makes you unique or different? I think that it's obviously really important to have a good command of how you're disrupting something that is, a legacy industry or, tired or stayed.
And some of the impact and the potential and how your product can do that in great depth. So obviously,
and don't overestimate the intelligence of a venture investor.
So don't underestimate and don't overestimate.
This beautiful thing happens when a deeply technical founder can approach subject matter at the level that you could explain to a 10-year-old and create the opportunity for them to go really deep on things that they may have done their homework on.
If you can break it down and pull it into that simple understanding, that's how they really know it to the level of depth, that would be a massive bonus for a VC.
Yeah, we spoke a little bit about interviewing your capital and making sure that they're a good fit for you as well. That really helps a founder stand out. I think things to avoid that we see a lot, there is a tendency to use analogy and be building the Palantir of pick an industry. And I think that misses a lot of the subtleties and nuances of what you're building, which might be a completely new market. I think other things that stand out also include what you do in your spare time, of course. That makes you interesting. And why you're taking a really different orthogonal approach to a problem set that might be misunderstood.
What's led you to that? How have you had this idea?
Maybe just to land this with a good example, one of the most I'd say overfunded or areas where attention has been spent would be on drones. Drone warfare. A controversial thing that we did last year was invest in the space when there is such an abundance of technical solutions to it. The human mind likes to work by analogy and put a label on something. And the company that we invested in, Titan Dynamics, in my mind is in fact an advanced manufacturing company. It is solving the problem that the modern warfighter needs attritable drones at a very low cost that can be forward deployed by the military. And so the framing of the problem set that this company is solving was so much more interesting to me when we spent a lot of time on the business of manufacturing and giving the tools of production to our warfighters. It's very easy for a VC to say there are 33 drone companies in the US. Seems like they've got it. But reframing the problem to your solution is a great thing to do.
And there's always innovation, isn't there? There's always an opportunity. If you see the right angle, there's always something that hasn't been innovated. You just have to have the idea, have the technology available. So there's an example, certainly.
That's right. But how does it actually solve the problem? The problem is not that we don't have enough high performance drone technology that we can use in combat with our adversaries. The problem is the cost of manufacturing attritable drones that can be autonomous, that can swarm, is exorbitantly high, and the users of that product need customization. It might be a different design on every mission.
Okay.
An advanced manufacturing company that happens to make drones in a way that the end product is less than $2,000 per unit and can be customized on every mission is extremely interesting.
Of course, because it's coming at affordable cost, and the customizable for everything is fantastic. Can be used anywhere.
There you go.
Okay, perfect. Any other particular areas that you think they require?
There's always the need for, I think, balance in a founding team. But we sometimes have interactions where there are 3 or 4 or 5 members of the team on an initial interaction with a founder, and we really want to get deep on the vision with the talent at the helm.
Okay.
So there's no need to bring the football team.
Okay, fair. Even if it does give you a bit of support.
Yeah, and then I think, in this discovery and partnership process, it is a competitive environment. There are great venture funds that other funds like following.
Mm-hmm.
I think it's important to be really intentional about the quality rather than just quantity of capital that you're after.
So almost be quite particular with the VCs you're looking at as well. Don't go for everybody. Be quite particular with the values, and as a founder, go for the ones that should align best.
What is it going to help you achieve?
Yeah, there you go. Okay, perfect, fantastic. Moving on to the next question, I suppose, outside of technical excellence, and you have covered some of these, is there any particular qualities? I know you've mentioned adversity. Is there any other particular qualities that you think are quite fundamental from what you've seen for successful founders that you'd invest in?
If I had to pick one, to me, I've developed a really healthy respect for self-awareness in a founder. And that self-awareness speaks to the ability to exercise really good judgment.
Okay.
That means being authentic, of course, but it also means really focusing on what you're uniquely positioned to do and where you need help.
Yeah.
There is the ability, or the need, should I say, to be self-aware about the regulatory environment, to be self-aware about manufacturing partners, to be self-aware about, if you're creating a new market, what that's going to take. And we internally at Tamarack actually really enjoy running a little exercise with founders where we look through the life cycle of the company and we almost assign probabilities of making it out the gates,
success,
getting into a niche market. What is that going to require across the levers that you can pull on across the product, across how it's going to get funded, across the market acceptance of it.
Almost simulating.
Simulating, exactly. That looks very different when you've sort of crossed the chasm from a niche market into the main market and can dominate it. And it surfaces an intense self-awareness of who you need to hire, how much capital it's going to take to get there. And so we can game this out together and both learn together when we think about the world that way.
Nice, and I like the idea. Obviously, it's almost a simulation that you put on the products and the life cycle of the business. You're almost trying to simulate as well as you can what that roadmap could look like, even though with capital, I imagine that's extremely difficult. But that simulation of going, well, we predict here there's a 32% of success. How are you going to deal with that? And like run through the challenges or potential big issues you'll face in those early stages.
And I can tell you with 100% confidence that everything we agree on will be wrong. But we're developing a way of being an extension of the team and working as a high impact player to make decisions in the future.
And it's almost like seeing how they deal with that adversity. If there's a problem there that they've not thought of and you disagree, like what's their viewpoint? How do they deliver that themselves? How do they take that?
Or creating the permission to pivot when it's appropriate.
Love it. Okay, fantastic. And then the last question for this section, is there any common mistakes or anything that you see founders do that you'd love to share?
Yeah, look, I think it's human nature to overestimate time, the cost of things, create false urgency.
Yeah, definitely.
And so I think that just sort of sets off the mission on the wrong footing. I don't think that it's necessary to live by artificial rules. If you have a lead for a round and you really want to close the round by March, that's about, we have fortunately generated a great amount of interest in what we're building, and we want to get back to the business of building, but we're trying to partner with the right capital rather than we're 3 times oversubscribed and we're closing on March 1st.
And trying to use that as leverage to almost make the VCs move quicker. And
then I think there's also a tendency to focus just on this dangerous word that VCs love, which is disruption.
Yeah.
It is not necessary to take down Lockheed Martin to be successful.
Yeah, actually, they're usually a great partner.
What are you creating?
Yeah. And I actually, from my conversation with some of the founders, thought previously with the primes are viewed as that they don't actually want to support the innovation, but actually some of the primes actually do a real good job within the defence viewpoint now that actually they're spotting this technology and actually supporting these founders earlier on, I suppose.
They can be phenomenal.
They can be. Fantastic. Okay, great. Okay, so moving on to section 5, company spotlight. Do you want to give us a bit more of an overview about your business, your firm? I know you've shared some details, but a bit more holistic here.
Sure. Yeah, Tamarack Global, we got started in 2018. So we've been doing this for about 8 years. Yeah. We're about to start investing out of our third fund.
Okay.
We're located on the east and west coast of the US, and there's a global in the name. So we're not just North America focused. We have invested in a critical minerals company in Australia and a security company in the Middle East.
Okay.
But our focus tends to be North America. And really, we stray away from a rigorous top-down approach of saying we want to focus 15% on defense and 20-something% on energy. Really, our mission is to partner with exceptional talent in the industries that service the real economy as an early stage partner. What has led to some of the successful outcomes in our history so far is really the ability to connect the dots for talent with industry that they're building in. We've often been thought of as a hedge fund approach to venture capital, which really requires non-consensus investing, and the ability to imagine end markets that maybe don't exist today.
So it's that different mindset where I'm looking for the here and now. You're almost, if you find the right founder, you believe in the credibility, you believe in the market, almost like taking slightly bigger risk potentially to go through and let's build it, let's look at that of the outside income, being like, okay, but the due diligence I imagine to make that jump's a little bit more intensive, but taking bigger risks than typical other VCs will, or?
It does. None of us worked at SpaceX. We're all investors by training. We've thought a lot about that, and we've seen a lot of situations where a very specific technical domain expertise for what we do can create a little bit of myopia. In my experience, if you ask a propulsion engineer their opinion on a critical minerals company, they're going to say no pretty quickly.
Yeah, of course.
And so we pride ourselves in the ability to get technical from sometimes no working knowledge very quickly. That is a common trait in the hedge fund industry where you're surfacing opportunity. What we take really seriously is the ability to connect the dots for founders at critical moments in the evolution of their businesses. We've been put in a situation where a founder within 3 days needs to be in the room with someone in DC that's a key decision maker. And through our network and the capital that we're fortunate to partner with, we get that done.
So fair. So obviously, as well as not just finding the right companies in the right markets and research into the intensity where you can believe in their journey, it's then the overall network that you have where you can get them in front of some people that might be making critical decisions on regulation or critical other companies that they might need to partner with due to that overall network that you have, and creating that face time and the opportunity to move the company forward quite easily.
We are in partnership with our founders. Around a quarter of the new companies we back come from engagement with our existing founders. When Tom Mueller from SpaceX puts in the call and says, stop what you're doing, you need to speak to this founder, we listen. So that partnership with founders is really important to us. We also have a reciprocal partnership with our capital, which tends to represent successful legacy industry operators and owners. And it is a joy to pick up the phone to something that has built a dominant business in trucking and logistics, to live game an opportunity that we're looking at together.
How have you built that network? Because obviously that seems the key strength is that network, isn't it? And it's quite a unique thing to build with quite a lot of different divergence or change within it. So like, how do you go around building something?
It's a very intentional thing. It came with our prior careers, as investors in the US and globally. we are always in anticipation of areas that we want to be more involved in.
So then you're aware of them and moving into them and networking within there. And
yeah, and when we see a signal to direct our attention towards a particular space, we will mine that space from first principles. A good example, we recently shipped a report on the nuclear industry.
Yeah.
We took it from first principles, but we engaged deeply with technical founders in our portfolio to edit our homework, as well as decision makers within the regulatory framework at the forefront of their fields.
So to make sure actually from the network you have, you're doing your research but verifying it or getting certain doors open to create the network within there, that if you move into that space, you've got a good solid infrastructure. I imagine it can always be constantly improved, but as part of the offering, it's like, look, we've done full life cycle on this network where we can offer support at each of the stages with someone we know or some advice.
Yeah, you know, if we're in the business of looking at non-consensus themes and sectors, we wake up every day in pursuit of building those connections and building that network with the leading experts in their domains. I think it's also worth mentioning, as investors first, what has served us really well, although we're an early stage fund, we have built a really rigorous co-investment program that's an extension of our fund. And so while, you know, at inception, at seed stage, we invest on average $3 million per company. In partnership with our investors, we have created a program to invest alongside our fund at the later stage where companies break up.
So you can cover the full life cycle pretty much and get that high amount of capital if required and proven quite easy as well.
That's right, you know, and so in venture, the top performing venture funds in the world deliver returns, let's call it in excess of 3x net multiple of their invested capital at the fund level. That's not an easy thing to do.
No, definitely not.
A much easier thing to do is, in partnership with your capital, surface the 5 to 7 companies that are truly breaking out from those 30-something companies, and be a life cycle financing partner with them and invest $30 to $50 million at their Series C, D, or E.
Is that quite a unique model, like you guys? It sounds...
I think the industry is coming around to it.
And at the forefront of it maybe initially.
Yeah, and a lot of venture funds run a co-invest program. What it should not be is a way to fill the gap when a company needs financing. It should be a search function for the truly exceptional companies that have demonstrated breakout stage, and continue the partnership, do more of what has gotten us there together, and provide that opportunity to our investors as well.
Fair. And you might have already touched on these points, but obviously you work in a highly competitive market. Like if you're speaking to a founder, you're invested, like what's the USP of Terramat Global? What makes you guys stand out in a very competitive space?
I think what makes us stand out in a really competitive space is the ability to show up at those critical points in a company's life. What doesn't work well is to be the library monitor asking if everyone's done their homework. But there are unpredictable things that are needed by companies in the future. And so we really focus on being a high impact, high octane partner at those specific points in time, which may involve hiring, may involve ideating on a product extension, may involve being capital fluent, given we, you know, all come from 20-ish years of investment experience. When you need that toolkit of should we raise a Series C or we need credit, we can guide you on that journey and be the capital partner you need throughout the life cycle of the company.
Actually advising them, sometimes they might feel they need to raise VC funding, but you might be like, oh, no, you've got a product here that you can sell to this market, and you'll look at that overall journey rather than just raise. You'll do it when you feel it's best. Yeah,
or if the end objective is building $1 billion first of a kind nuclear reactor, we can take you back from there to today. And be pretty capital fluent in creating the right plan to get there. And then I think the other thing I'd mention is we have developed honest friendships with the best founders in our portfolio. We are there for life, doing this together. But yes, it's a highly competitive environment,
Yeah.
and we're a generalist fund
Yeah.
that doesn't stray within one lane.
Of course.
We're opportunistic and we're non-consensus.
Of course, yeah. And I think one thing that's quite intriguing about you guys, you're always more looking for the market makers, aren't you, or the opportunities of the future that are over longer time periods than 10 years. It's
Yeah.
a unique thesis I've heard so far.
When we backed one of the leading eVTOL companies, Archer,
Of course.
that company went public, and the founder, Brett Adcock, came to us and said, I have something new for you guys, humanoid robotics.
Yeah.
I'll be honest with you, we don't know much about humanoid robotics.
Of course.
We knew a lot of, yes, we knew a lot about the founder, and we were able to create a scenario where that reality came to be, and be open-minded enough to go on that journey.
Nice, yeah, and that journey is very intriguing to watch as well, but hitting a critical moment, but we could discuss another day, okay. Moving on to the last questions section then, I guess, for yourself, you've got a lot of great companies in your portfolio, so I know this is going to be hard, but is there any particular company you've worked with or any story that you're particularly proud of that you want to share with our audience that you think might be of interest?
Are you asking me to pick a favorite child?
Ideally, yes.
Sure, maybe narrowing it down, one company in particular that I think the world is becoming aware of that I was personally involved with, that I think is worth mentioning, is a company in Los Angeles where I'm located, called Divergent.
I'm aware.
I think the world has become really familiar with some of the successful neoprimes, Anduril, Saronic, and others like Helsing here in Europe.
Mm-hmm.
Divergent is a very unique company that's been around for a little over 10 years. What's special, unique, and relevant about them is this is a company that has created the full life cycle of how manufacturing we believe will be done in the future,
Mm-hmm.
which involves generative design at the outset for complex vehicle structures.
Yeah.
It includes the manufacture of those components, mostly in aluminum alloys today.
Okay.
It also includes the fixtureless assembly of those components, using robotics. And yeah, and this business started with a focus in the automotive industry, where
great cars as well.
Yes, they happen to make the fastest street legal hypercar in America today, which was part of the journey. But they've also become a key partner to the aerospace and defense industry when the US responded to the events over the summer, and fired a number of missiles, highly expensive rockets across the pond. They exhausted about 50% of the inventory of that kinetic capability. The replacement cost on that was always an 8, sometimes 9-figure cost item. Divergent have partnered with those defense primes to reduce the component count, weight, and cost of that by about 80%.
Really interesting there, is it something you've mentioned throughout quite often with great businesses, that there was a market in place, there's a great rockets already being out, but the fact that company's developed a product that's weighs less, costs less, and now delivers in the market, is that where that huge opportunities come from, or?
It was a journey to get there. This is a business that first of all needed to build at its headquarters this full supply chain of a technical product while producing a hypercar, and ultimately partnered with the defense prime to bring those capabilities into their own manufacturing line. I think at the point at which we invested, a lot of investors just saw risk and weren't able to imagine this outcome. But it has required deep engagement with the defense industry, a highly technical team that covers generative design, advanced manufacturing. In fact, Divergent along the way, from scratch, built their own proprietary 3D printing technology for aluminum alloys. And so what started with reducing the brake calipers on a hypercar from 40 components to 1 over a decade became that capability for any complex vehicle structure. And I truly believe that the future of manufacturing complex vehicle structures or any complex hardware component will look like this.
Wow, okay, fantastic. And that's the almost creating a unique solution in a market that was already there that's just going to completely impact the whole market and the way things are done.
Yeah, and you know, in the new defense space, I think there are a lot of companies that are very good at prototyping.
Definitely.
But at scale manufacturing, which is what the West needs to reindustrialize, requires scale solutions that can go from prototype to low range initial production of maybe 10,000 units a year to true scale serving multiple OEMs.
And what's really interesting here is something that you spoke about earlier, where they had this initial hypercar, one part of the business, obviously great, and then from that technology they've then either spotted another opportunity or been directed towards another opportunity where it's created a whole new revenue structure and impact, or was the plan for Divergent from the beginning always to end up within 3D manufacturing defence?
I think there's been a real business model evolution here.
Okay, fair.
And you see that in the margins of a company like this. This is one of the most interesting problems to work with in the hard tech space, is the need to stand up an initial product that solves inefficiency and navigate that margin accretion from penetrating other industries. The capex around that can be challenging, but you get to a point where the payback period on a future production facility is measured in single-digit years, 1 to 2, not a decade.
So you brought that whole cycle down dramatically once you eventually get there, and the turnaround on the capital is 1 to 2 years is crazy.
That is an important factor. I think the other important factor is, while you might begin as a proof point with very technical components, say in the autos industry, the ability to increase your component share and go from brake calipers to, you know, a fork to a chassis to a defense structure with the same technology and the same capex is a really interesting business model.
And then excitingly, they can then, I assume, correct me if I'm wrong here, look at other industries in the future and do a similar transfer?
You've got to be bounded by physics at some point, and so this is really applicable to aluminum alloys. But we've seen similar business models in other difficult parts of advanced manufacturing. My favorite one is composites, which is leading to bottlenecks and long delays. At large new primes, you can't 3D print composites, and so new materials discovery is related to that as well. But that same business model of developing a new manufacturing process that touches the entire value chain from design through assembly, and doing that in an automated way on a fixtureless assembly line is what the future looks like to me.
While reducing weight and reducing costs in the industry that can have.
That's right.
Okay, it's fantastic. So on to the last section, and thank you very much for your time, Rob. But optional quickfire round. So question one technology that you think is heavily undervalued?
Humanoid robotics.
Okay, fantastic. One piece of advice for engineers who want to become founders?
Just do it. It's not as risky and not as hard as you think. You got nothing to lose. If it doesn't work, at least in America, failure is celebrated. And you might find that it's very easy to recruit other technical talent to your vision. I would really think about your skill set in a broader context than just, you know, the skills that you've acquired. And the world needs a lot more of you. The world needs technical talent. We live in a society that has celebrated digital prowess to a high degree. We need everything. We need electrical engineers.
Analog's making a massive comeback in all areas. It's critical to all technology, definitely.
It is, and China's really gotten this right with investing in technical talent. So we'd love to have you.
Perfect. One book, must read?
One book must read. There are many. The one that I'm enjoying the most is rereading Daniel Kahneman's Thinking Fast and Slow, which is the juxtaposition about how the human mind works in decision making in environments where rapid fire decision making is relevant as opposed to long-term thought. I also highly recommend A Brief History of Artificial Intelligence, which looks at the history and evolution of human minds and animals writ large, and how we came to the intelligence that we have today, how it was acquired in an evolutionary sense. I think it's highly relevant to the current foray and a big problem that's being worked on with the transfer of AI in text-based LLMs to the physical world and embodied AI.
Okay, yeah, Rob. So next quick fire question. One piece of advice you'd give yourself at 20 that you know now?
I would say don't let perfection get in the way of progress. When you have conviction, ship the product, don't react, act.
Perfect, okay. Then lastly, the question from our previous guest, one prediction for the next 5 years that you'd put your hat on.
In the next 5 years, I predict that non-human labor in industrial settings will be doing at least 30% of assembly work.
Really? Okay, well, fantastic. Why do you think that?
We've seen how rapidly the advance in humanoid robotics has been adopted in industrial settings, in the automotive sector, in the logistics sector, and we are on the cusp of solving the interaction with the real world without reinforcement learning.
Love it. Okay, and then for our next guest, one question you want to ask them?
Assuming that they're in the business of investing, I would ask them how many companies that don't exist today within the hard tech physical world realm, valued at north of $500 billion, will exist by 2031.
Okay, fantastic. Good. And we'll turn it off camera now and ask his answer to that. Thank you very much for your time, Rob. Great having you on board.
Absolute pleasure to be here with you, and thanks so much for the work that you guys do.
Thank you.